Hi and welcome to Swissquote's Daily Market Talk. It's Wednesday, November 6th. We are on the cusp of the US election results and they're starting to trickle in, pointing toward a more favorable outcome for the Republicans in the Senate and Donald Trump for the White House. As a result, the so-called Trump trade is in full swing this morning. So again, welcome everyone to the day after the US election. So yesterday was a calm trading day in the markets as many investors around the world moved to the sidelines to wait and to see the election results from the US. So there wasn't much on the economic calendar in the US except that the US services sector expanded stronger than expected by analysts in October, so at the fastest pace since summer 2022, and that prices grew even faster. So the latter slightly moved the Federal Reserve probabilities in favor of the Fed hawks, but investors' focus obviously remained fully on the US election results. So what is really pushing the US yields higher this morning is the early election results that point at the time I'm talking here this morning, a Republican victory at the Senate and a Donald Trump lead for the White House. So this could change rapidly, of course, and could lead to sharp price twists and turns, but the so-called Trump trade is now resonating across the global financial markets at the time I'm talking here this morning. As such, the US yields are pushing higher on expectation of further debt ballooning in the US under a Trump presidency, which is, by the way, also the case for Kamala Harris, but the impact is higher with Donald Trump than with Harris. Bitcoin, on the other hand, hit a fresh record high, while in the traditional currency markets, we see that the US dollar is rallying against most of its major peers this morning. The euro, for example, which is considered as one of the most vulnerable major currencies to a Trump presidency due to the tariff threat, tanked to 107.18 level against the greenback earlier today. Then Mexican peso, which is another currency which is obviously highly vulnerable to a Donald Trump win, is down by 3% at the time of talking, and the Chinese yuan is weaker as well. Then cable slipped below the 129 level. The dollar yen extended gains to the highest levels that we saw since summer, and even the safe haven assets like the Swiss franc and gold are weaker this morning against a broadly stronger US dollar. So this is the situation in the currency markets. In equities, the divergence is quite clear as well. The major US index futures are in the positive at the time I'm talking here, with the Dow Jones futures leading the gains. Now, Goldman Sachs trading desk thinks that a Republican sweep could actually boost the S&P 500 by 3%, with a decline of a similar size in case of a Kamala Harris win, and a move by about half of these numbers if the US ends up with a divided government. And here in Europe, FTSE futures are flat at the time I'm talking here, whereas the DAX and Eurostoxx futures are clearly not smiling at all. And Bloomberg Economics actually, try to put numbers on the potential damage that Trump tariffs would cause to the world and to the trading partners. And the numbers look scary because China's export to the US, for example, could melt by more than 80% according to them, assuming a 60% tariffs relative to the baseline of no new tariffs at all. Then Australian exports to the US could melt by more than 50%. The British and the EU exports could tank by more than 40%, and these numbers would be worse if the trade partners decide to retaliate and increase their own tariffs on the US exports to their countries as well. So one hope here is that some of the threats, the tariff threats, are expected to be just for negotiations and not more. But everyone has interest that it stays that way. That's a certainty. Now, anyway, it will take hours and it could even take days before we have the final election results from the US, but you pretty much get the idea, I guess. Short treasuries, long the US dollar, long Bitcoin, and long equities, even small and mid-cap ones, are the major pillars of the Trump trade, while the contrary is true for the Harris trade. Elsewhere, yesterday's data showed that the French industrial production fell more sharply than expected in September, if the Euro bears need more bad news than a Trump lead, while activity in Britain expanded stronger than expected by analysts. But the 10-year gilt auction didn't go well enough yesterday, so the 10-year gilt yield extended its advance to the highest levels in a year on the back of the rising warning that the government's plans to boost growth in the UK by boosting spending is not going to be cheap at all. So that deterioration in growth outlook for Britain is obviously negative for sterling, but the fact that the Bank of England should and could remain careful when easing its monetary policy, because higher government spending is obviously, well, a boost for prices and inflation, could limit the downside potential of the sterling if the growth prospects for the UK don't worsen significantly. On the earnings front, well, Palantir, the tech darling Palantir, rallied more than 23% to an all-time high level yesterday after the company announced a record profit on AI demand and raised its earnings forecast as well. So Nvidia jumped 3% on these AI positive news, and Invesco's semiconductor ETF gained 2.80%. Now, someone from our audience asked yesterday quite a relevant question regarding, well, the impact of US elections on semiconductors. And well, the answer is not very, very clear, but the CHIPS Act that has been brought on the table during the Biden administration is a bipartisan act. And that act should remain in place under Donald Trump, who actually likes to bring manufacturing back to the US. Then tax cuts and increased defense spending on AI probably could also be positive for the US chip makers. But on the other hand, well, worsening trade relations with China and the rest of the world, and obviously worsening chip war with China, could obviously dampen the chip makers' sales and profits there. So it's quite a double-edged sword. Elsewhere, Saudi Aramco's is the last oil giant reporting weak earnings last quarter. Now, Aramco's profit shrank by 15% in the third quarter compared to a year ago due to weak oil prices, obviously, but the company kept its monstrous dividend of 31 billion US dollars unchanged. Simply because the Saudi government owns nearly all Aramco and needs this money to fund its project. So Aramco has to borrow money to pay dividends to the Saudi government today, and that's not necessarily a good scenario. So you see where I am going here, right? Oil prices have been on a falling trend since, a while now. The weak global economy and the sluggish Chinese demand and also the green transition have obviously taken a toll on oil demand prospects, while OPEC's production cuts have been mostly countered by increased oil production elsewhere in the world. And in the sense, the US, for example, is pumping like there is no tomorrow. And Donald Trump says that he would pump more. So under the current circumstances, Saudi, which is the backbone of the OPEC policy, could be increasingly tempted to just give up on the production strategy and simply adopt a market share focus to increase its revenue by selling more oil to its clients with cheap prices. That to me could actually weaken the OPEC encouraged oil bulls' hands in the medium run. And while the barrel of US crude is back below its 50-day moving average this morning and is preparing to test the $70 per barrel support to the downside yet again. So this is all for today. I'm İpek Özkardeşkaya, and thank you for joining me, and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions and your questions below as usual. Follow us on Instagram, on X, and on LinkedIn for regular market updates. Subscribe to our YouTube channel for daily market comments. And please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow. And until then, good day trading.